a real trade plan that works every day, right? Day in, day out, consistency. That's what I'm all about here. So, the first thing really that we want to ask ourselves is, what's going on a bigger picture? Every single day, I zoom out and look at the bigger picture. Um, and for me, that's zooming out to a monthly chart, right? And I like to look at the monthly chart on a bar chart, and I use Thinkorswim, right? So it's going to be different for everybody, but I mean, TradingView, anything is going to be the same. It's just a bar chart. Hey, what's up, Chappie? Oh, you got COVID, man. I'm sorry to hear that. So what I'm looking for here is a couple of things, right? A couple of questions that I want to be asking myself um, every single day, right? And it would, behoove you to write it down, but it would be eventually it just becomes kind of a routine, right? And you guys hear me preach about journals all the time, and I think that it's, part of being a successful trader is journaling, and if you don't journal, then you're never going to be successful, and that's kind of just a fact. But as you get more advanced or more experienced or more consistent is really the key that you're looking for, because experience and consistency are not always hand in hand when it comes to trading. Your documentation will become a little bit easier or become shorthand, right? So think about it when you are in any career field and you know eventually working there, you learn acronyms. Okay, this stands for this, this stands for this, this stands for this, right? It's the same way in trading. So when you're writing down your trades, there's going to be a little bit of shorthand in there. Or you're going to know, like, okay, that one was just a little pop. Like, no need to really take big consideration with that. But because when we do trade, we spend a lot of time on the close time frame, right? We know I'm trading on a 30-minute profile. So what's up, Clipper? Um, and so that's the time frame that I'm kind of keen in on all day, right? So it's good to take a step back, zoom out, and look what we're doing. So every day, and this is going to be for the futures, but I'm going to do this on anything that I'm going to trade. And so I'm looking at the monthly. I'm trying to decide what's the trend, right? What's the overall trend? What's the long-term trend, right? And I have a trend line dating back all the way from the COVID low, which is back here, March 2020, back up into right here. I could draw this trend line probably a little bit more, you know, up and make it tighter, things like that. I like to give my trend lines the space, right? I like to just tap them on right there and just see, right? Because that's where price explored down to. Okay, and so we can see like the long-term trend, like the long-term trend is probably up, but on a monthly trend, you know, we're kind of down, right? I mean, yeah, this month is coming up nice, but we've got 2 months in a row that have made lower lows, right? And so that's kind of where we get this range from, this overall range. And so I have the low of the range here, which is the 4108, which might be a little bit different now that we're on this other contract that says the low is 4108.75. So it's right. And then the high here was 4808 quarter. Just so I can see the overall range, because that's when this move down started happening. And then we have this month here, and so I like to mark the previous month. This is February, because right now the month that we're in is inside that range. So let's say tomorrow we break above this 4586, right? And it really looked like we wanted to give it a shout today, but just weren't able to get up there to take it. Um, then my range would, I would just get rid of this line, and then my range would be from 48.08 quarter to 41.0875, and this will become the top of my range, right, on a monthly. And this is zoomed out. What's going on, Lim? All right. So is the long-term trend up? Is it down? Are we balancing? Are we up in balancing? Are we down in balancing? Right. And so it kind of looks like to me that we are down and balancing. It looks like we're kind of in a 2-month balance. Yeah, we might get some more upside, but um, are we going to? I mean, I don't know what's going to happen. Right? Nobody does. But for right now, as of right now at this moment, we're kind of in a 2-month balance. Right, from this low to here is about a 2-month balance. So yeah, we're balancing, but we're balancing lower. Okay, so we're back in where we see this previous balance zone, right? Or this, I mean, you can include all three of these in here. But this kind of previous balance zone, right? This was a rejection and then pushed up out of that balance zone, tested all the way to the opposite side of balance, which we know that markets tend to do once they re-enter and spend time in balance. Tested below balance, failed, tested below balance, failed, and now we're just kind of hanging out in balance. Okay, so that's just something that I like to jot down. But for me, I'm comparing it to the previous day, right? And if we pull up the trade view from yesterday, this is just something that I post every single day. Um, the monthly is still positioned inside the previous month's range, right? Is that true again today? Yes. Okay. So really on a monthly, nothing's really changed for me at this point. This is just the same thing. The monthly is still positioned within the previous month's range, right? Easy for me because I don't have to redo that slide because nothing's really changed. So next, um, well, and then another thing also to consider too, before we move on from the monthly, what are the ranges, right? And this is why I kind of like to use, not working on the monthly, I guess. Maybe there's not enough. I don't know. But what are the ranges, right? Are we getting some bigger ranges than normal, right? If we zoom out and look at some previous months, what are our ranges like, right? And then we look back at some of the previous months where we have bigger ranges than the preceding months, and what happens in the market during those times, right? And so, I mean, you can see here it's kind of just, pretty small, but we zoom in, you can start to see like when you start to get bigger ranges, look, the market starts to test lows, right? Not necessarily just go lower, but just, starts to explore a little bit more. So that's something to consider into your trade plan as well, is if the range is a big range and it's likely to extend. So, this range here is 45.86 to 41.08. I mean, we're talking almost a 600 or almost a 500 point um, range. It's a pretty decent range. If it were to extend, where's a good target, right? And so to the low side, not really going to pay attention to it right now. I mean, if there was some dramatic thing where we fell 500 points tomorrow, that would just be just something amazing. But just not something that I'm concerned with at this moment, right? I'm more concerned about us extending the range to the upside, which is a very real possibility. And so where would the targets be, or where's the top of that range? And that top of that range would take us to that all-time high. So then I'm going to move over to the weekly, right? And the weekly comes with some questions that are similar to the monthly chart, but taken a little bit more closer because now we're zooming in a little bit, right? And so on the weekly, I really like to see, are we trending, right? And how do we determine if we're trending, right? Are we one time framing? That's a good way to kind of spot something that's trending. And I would say that we are one time framing off the bottom, obviously, right? 1, 2, 3. We're one time framing to the upside. Oh, this is just for the evaluation, chappies. Or this is just for like the bar charts. This is just how I do it. I've always used Thinkorswim. I just Don't really don't really look at the monthly until like the end of the day. But so, and then also determine where are we in balance, right? Or are we in balance? And then look for weekly references, right? Is there excess somewhere? Is there lack of excess somewhere, which we see here? That right there's lack of excess is a kind of a double tap, right, on this previous 2 week balance. This 3 day balance high and 3 day balance low is referring to the daily chart, and we'll see that on the next. But we're seeing we're kind of breaking up this one time framing, right? So when you're looking at this, especially in a weekly perspective or even in a daily perspective, it just tends to get zoomed in. And I think a lot of times people don't really tend to recognize these things, but when we're one time framing up, when you're shorting something like that, and this is on a weekly chart, so it's a little bit different than trading intraday, but even intraday, if you're shorting something that's one time framing up, you are going against the trend, right? And 9 times out of 10, if you trade with the trend, even if your trade wasn't the best trade, it gives you opportunity to make money. Um, this happens. And so another thing I like to do at this point in my trading plan is pull up an economic calendar. So one that I like is, I mean, there's a bunch of them really, but um, I'm starting to really like this one on investing.com. Free. Come over here, go to tools, economic calendar, and then boom, here we are. All right, so today's economic calendar we kind of already saw. So let's take a peek at what do we have on the docket tomorrow. Not really looking at any of these things. We've got FOMC Williams at 6 a.m. I'll just put us in Eastern time. That's what I'm. Okay. So tomorrow, Fed Williams speaks at 6 a.m. my time. And then we have the consumer confidence at 7, Jolts job openings at 7, right? That may move the market a little bit, not too much. We've got Harker speaking later in the day, 7:45, and then really not much else. All right, go for this week. We looked at Monday, we looked at Tuesday. Let's take a peek at Wednesday. Non-farm payrolls, that could be a big mover. Crude oil inventories, this could be a big mover too, especially with all the news going on right now. Else really jobless claims. And then Friday, a bunch of news on Friday, which makes sense because I'm pretty sure Friday is the first, right? So one thing I just really hate getting in front of is when they're kind of just driving the market up at the end of the month, just because it's the end of the month, right? And so then the next thing I like to do is head over to Twitter and go to, well, this FX Hedge one is good as well. Make sure it's on the latest tweets, because if it's not, you're just going to be seeing all kinds of dumb, worthless. Well, this is a good guy to follow too, Michael Gad. He runs the hedge fund, I think, or a mutual fund. All right, we'll just fast stock market news. This is the person that I go to find out like all of the news, right? So Senate passes China competition bill to start talks with the House. I think they already passed it. Well, I guess yeah, that's what he said. And I mean, it just has a lot of news. So kind of just slide through this and see if anything stands out to me, right? Things that would stand out to me: oil, right? If something about oil, something about anything going on with the geopolitical situation, um, like stuff like this, like FBI after audit found, like, I don't care about that, right? On He posts a lot of stock market news. But yeah, I mean, he has really good news. He's really fast. This is where I go to look for it, right? And then from there, I click back to my platform, depending upon where I'm at, and I'm looking at the daily here. And so on the daily, we can take a look over here in our ATR, which is our average true range, is 81 points, right? And so that's just telling us, right? That's what the average of the past. I have it on the past 5 days. So the past 5 days, the average range has been about 80 points, and that's just something I use to kind of set up my plan for what my goal tomorrow is going to be, right? Because obviously, if the range is 40 points, my goal being 40 points is going to be pretty tough, right? I'm trying to capture an entire move of the market. But once we get to the daily, I just try to determine if there is a long-term trend, if there is a short-term trend here. Are we balanced? Are we one time framing? Are we making higher lows or higher highs? Are we making lower lows and lower highs? Um, I like to compare, previous highs. We can see there's kind of a cluster of highs here at the top of this range. You can see we are one time framing off of that little pullback to the low of balance. This was our 3-day balance here. This was a move up, acceptance into balance, and then our 3-day balance, and then a move up out of balance. The target would be the top of a bigger balance zone, which was previous 2-week balance up here. So what am I taking from this, right? What am I getting from this? I'm getting my sentiment, right? So what's going on in the market today, right? The market's going up, right? Um, 1, 2, 3, 4, 5, 6, one down day, 7, 8, 9, pretty much 9 days. Um, we've been moving up, moving on out. One day that was just pretty news driven liquidation, anyways, and then easy bounce the next day. We've been ending every day on a spike as well, right? For the most part, if we zoom in here, right, some of them are a little bit larger than others. We'll be able to see it on the profile a little bit easier when we switch to the profile, but we're pretty much ending every day with a spike. So that's kind of telling you that price is exploring um, to the end, right? And it also kind of leads me to think that the big money or smart money is being patient here, right? And just waiting to get in where they want to get in, and that's it. Nothing else. So, and we've kind of seen that, easily ran up. Even today, too, on the lows today, it was pretty obvious that the bottom side was done. Um, I like to look at the settle as well. You have Thinkorswim, you can make sure that it's on the settle. You just turn it to settlement daily close, and so our settlement's going to be here. But to get my settlement prices and things like that, I go to this website. Go to your type in CME. I'll copy this and post it in the chat. Come down here, click on settlements, and then boom, last, change, settle. And then from here, I mark this stuff on my profile. I mean, this is marked here, but just so we have the days marked on our profile for intraday trading, right? With the daily chart, I'm not paying attention much to the volume. I do have it on here, and I just kind of like to see sometimes the continuation, and we can kind of see here volume, pretty not unimpressive, right? Nothing like on the way down on some of our down days. We've seen big increases in volume, but today's volume wasn't too impressive. And if we pop this open, actually be able to see. Yeah, so we can see the volume was about 12% less than it was on the previous day today. And we still, today was a pretty, ended, looking pretty bullish, right? Finished on the high, probed into higher prices at the end of the day. So it makes sense that it wants to go up. And so from here, what I'm kind of looking for, right, is what's the next play, right? What would be the next thing that would make sense? And what I'm looking at is I'm looking at this previous kind of cluster of highs, and this is where we know that auctions ended, right? Previous auctions have ended here. This is a spot where buyers have decided that they had enough apples and they weren't going to buy anymore at the high, and we faded off pretty much every single time, right? There was a time where we kind of hung out there for a second. So my initial thought is if I don't see strength above the top of this 2 week balance, well, one, I need to see the top of the 2 week balance get broken. But if we do break it, I'm not just closing my eyes and getting long thinking, oh, hey, we're going to go up. I want to see some time get spent and some volume come in to make me comfortable to get long with them, right? And sometimes what happens is you miss the trade, and that's just gonna happen, right? It's just part of trading. You're not always going to get the trade that you're looking for. And so sometimes this thing pops up, let's say, and I'm staying patient, waiting for it to build some volume, and it doesn't, just hangs out 2 seconds and then starts going. Well, that's how they get you, right? Because they see what happens. They see all the people that were in the market looking to try to get in, and then price starts moving up. These people start running up, buying the top, and then all of a sudden, boom, comes back down. You could have got in where you wanted to get in. The old saying, the trend is your friend. That the most important thing to keep in mind when you're trading your style is the trend or something else. Um, so not, I don't really consider it the trend. I'm more looking for a trend in like a bigger perspective, right? So like we're kind of like on a daily, we're kind of like in a downtrend and an uptrend. And I mean, you could even argue that the market is literally just balancing in this huge area. Um, it's definitely a decent possibility. And we have, some previous balance zones here, right? Overlapping value with balance. And we just haven't seen that yet, right? We kind of had a little 3-day balance, but it wasn't anything like these previous days. It was, I mean, this one kind of ugly. Trading it was ugly too, and so was this one. But I mean, these are kind of keys, right? Came back up there, tried to do the same thing, came back down, and when it popped through, it really just kind of ran through all this balance. And so now we're looking just to see like it's been rejected, been rejected, been rejected. But when I say rejected, it hasn't really been rejected by buyers. It's well, I guess technically it would be. It's just that they're not buying. It's not like there's some huge selling pressure here, like there was here, because there was a lot of selling pressure here on this way down, right? Um, but not really here. This was more of just a fade down. It popped back up, it faded back down again, and then, like I said, smart money is just waiting for their time to buy it. And smart money waited, they bought it, and they unloaded everything they had, and they let it come back down. What they do, they bought it here, unloaded it, it came back down. Where did they buy it? Same spot. So if this thing comes back down, well, where do you think they're gonna bring it to? First target is going to be middle of the range, but probably the low of the range if they were to bring it down. And right now they're bringing it up to the top because everyone else is running the market up for them. So that what I'm saying is like you don't want to when it comes to the trend, you don't want to be fighting, one time framing up, right? What lets you know that selling is supply is actually in the market, right? Or there's some sellers aboard in the market is if we stop one time framing on the daily time frame, right? So until we break today's low, in reality, I mean, there'll be some short opportunity, I'm sure, but in reality, there's really no sign that there's supply in the market, right? It's more of just a understanding the auction. So the most important thing in my trading style is understanding the auction, and that's not really um, my style. That's just the most important thing in trading, period. No matter what style you have, if you don't understand the auction, you're not going to be successful. It's just a fact. And I'm talking about trading here, right? Investing and swing trading, these are different things. So I'm not trying to hurt anybody's feelings and tell them that they're shit. But if you don't have a good grasp on what's going on with the auction, you're gonna struggle. And nobody likes to struggle, right? And so this is why we make these plans. So we know that at least on the daily time frame, the auction has been to the upside and there hasn't been any supply. So until we see some supply, there's no real reason to be getting, bearish, right? And you guys know me, I have a bearish sentiment like just about me. I'm just like seeing this thin volume and understanding what's going on in the world and thinking to myself like, man, this is just so weak. And I mean, we did see some weakness, and we've seen a couple days with some downfall and just some barely news. Um, but the market has kind of showed us today too that it has confidence in um, Joe Biden, right? Joe Biden, President Biden, he um, stood his ground today about his statements and just said it was his personal opinion, right? It wasn't had nothing to do with policy, and people were always trying to provoke everything out of him, but um, he showed confidence again for the second time. The markets liked it. It happened a week ago too for something else that he said. I can't remember, but yeah. And so the next thing that I do, so now that we've got this down, right? We're looking at the monthly. We're still down. So let's rewind it back real quick. We're looking at the monthly, and for right now, we're kind of balancing lower, right? We're in a kind of balancing lower. Now I head to the weekly. And what's the weekly doing? Weekly's kind of all over the place, right? It's coming up to a resistance. It made um a higher low this time and has gotten above that previous bar that makes a low. That's what makes it a higher low. And now we're looking to see if we can get to the top of this kind of 2 week balance, this previous 2 week balance. So we're in balance, but we are one time framing to the upside, definitely. And then to the daily's a one time framing up the past 3 days. We're seeing this V bottom move out of the low, which is pretty much what they wanted to see. Um, and the key here will be to see if they've got the power to take this previous week's balance. And so we're kind of almost expecting this to break the next day. We want to start identifying these areas above as next levels. So we can see this 4661. What's the high here? High here is 4660 and a half. High here is 4736 quarter. And so those are probably going to be the key levels that the market will target if it does continue to break out, right? Because I mean the reason I'm looking at this is we have 2 day balance, even though this is an ugly, but oh, it was an ugly square. Let's be honest. But even though it's ugly, that's a 2 day balance. It would make sense if it gets accepted in an upper balance that it trades to the opposite edge, right? Same thing. Gets accepted, trades to the opposite edge. I got back into futures the past month and I found out that NASDAQ has more volume than the ES. What are your thoughts on that? The NASDAQ has more volume than the ES? Are you sure about that? I don't know. If it does, that's just crazy. I don't know if that's lately or what. Volume. the Nasdaq is just tough when you're first starting out because it is so volatile and you can just get whipped around hard. Um, the Nasdaq. I mean, they have the micro Nasdaq, which is nice, and that has a lot of volume on it, a lot of liquidity. Um, so that can be. Oh, it moves more. Oh yeah, definitely it moves more, way more. Yeah, yeah. And the reason because of that. So if we look at what the underlying is, so if we're looking at the S&P 500, which is the ES, these are all the stocks that trade inside this. You could be right. I have no idea, to be honest. I never checked the volume on the Nasdaq, so I have no idea. And then you see the Nasdaq, right? A lot less stocks. So if one thing like today, Tesla got a lot of love, right? Up 8%, that could really just propel the market. And we saw, the Nasdaq didn't really look weak at all today, whereas the ES and the Dow kind of struggled a little bit and then started to pick it up at the end. And then another thing I actually like to do before I get off Thinkorswim is I like to go over here. Thinkorswim has this tool that you can pop up that is called Trade Flash, and it basically just kind of shows you all these big things. And so I like to just link it to whatever chart I'm looking at, and I start up here. Oh no. Okay. So we saw a big Facebook trade today. It looks like a 580 call, or no, 25 put and a 225 call. So someone's running a sold the put and bought the call. Oh, so oh damn. So this person's like double long. Yeah, so this is like a double long position. They're selling premium. Yeah, they're expecting the market to go up here. And this Facebook, um, on the top of it. I like to look at the top 100 stocks in the S&P. Um, there, the other ones. Okay. So Apple. So we can see some big trades in Apple today. And I like to, I'm really only caring about the trades that are at the end of the day, right? Um, that's it. And so you can see this guy sold some Apple weeklies, calls, 175 calls. Better hope that the price goes down. This guy bought Apple 165 calls, 3,000 of them. Bought 165 calls. So those are in the money calls. So that's not really anything to care about. Microsoft, nothing. About Gucci, Google, nothing. Amazon, nothing. Tesla, nothing. I'm just looking for big trades in there. That's it. I mean, there's other things that you can use to scan for big trades. There's First UNH, JP Morgan, Walmart. Yeah, so nothing really too big. All right, so the next thing I like to do is pull up my profile and get my levels. You can see I've made it back to one tick just because the VIX is down, but I'm gonna switch it to, actually I'm gonna leave it on one tick. So pull it over here. my settle's at 68, my last is at 70. So they're pretty close to the same. I'm just going to use the settle. If they're anywhere from, I mean, even 2 points, you could probably get away with it. But if they're within 2 points, I'm just going to use the settle, right? This is that same website that I posted earlier. So our settle is 45.68. Grab my little handy tool that says settle, go up to here, 45.68. Toss it in. And then I could put another one at the 70, right? Because that's where the last trade was at, but I'm not really too worried about it. It's pretty close for the most part. The next thing I do is I go over to my studies and I actually hide the volume when I'm first starting, right? And what this does is really allows me to pay attention to the market and what the market's telling me. I am gonna change it so it's 2 TPOs per because it's just gonna make it a little bit easier to see. Um, so we can see here, we reviewed just the day itself. We had an open down here at 29. Oh, and also move the half back up to the half back because it's going to change tomorrow. We had this move off of the open where we kind of popped up and then we kind of came back down, headed down, and then really just kind of liquidated, but never really got too much steam. Once we got to the bottom, we started to bounce. G period opened up and it really just started to look like there was no supply. And then it started to recover, right? Real dangerous spot to trade down here at the low, especially once we're already being accepted inside previous day's value. One thing with the balance rules, not sure if I put it on the trade plan yesterday. Maybe it's not a balance rule, but just something that I've seen somewhere where if you move inside a previous day's balance area, if you get a strong reaction off the point of control, and this was the TPOC and the VPOC was like right here. We'll put it back in a second. But we got a fairly strong move off the point of control that can end the balance rules, right? Because typically if something comes back inside of balance, it reverts to the other side of balance. This was a it's actually meant to say 3 day balance high, but I put week. But 3 day balance high never really got accepted in there, right? We had that F period open, it peaked lower, and then just popped back to the upside. So this is kind of telling me that that 3 day balance was enough to shore up the supply and start moving price back to the upside. And then we saw liquidation pretty much all the way until the end of the day. So first things we want to identify, we do have some single prints down here. So let's go ahead and mark those. Get a pen out. I don't have the deal so I can right, but one of these. None of them. These ones are the same. We'll change it. I like the single prints to be in pink. And then it just changes it and adds the name. Here, get our crosshair back. Copy and move it to the other side of the single prints, right? So this is basically our first area where if there is a move to the downside that we'll look for a reaction. This is where people are trap short and where buyers are at, right? And that's what causes single prints is this rapid short covering with initiated buying to break the high of the day. This was almost, I mean, this trade was setting up like almost all day, right? We saw the 40 just get battled over pretty much all morning. Got smacked over, smacked over, smacked over, and then finally just gave it up, liquidated down, and then once it got above, it really never looked back. You can, it really just kind of kept going. But this is going to be our first level that I'm watching. These these levels here. This is that BPOC from the other day. I could get rid of this actually. Trace. Okay. And the next thing that we identify here is that we ended on a spike. So we want to map that out as well. Electronic properties, our spike at there. Spike. Go ahead and move it up. Spike up. Spike base, save, load, changes it. I change them all the time. You could probably do it faster than that. I'm pretty new at Sierra chart, so um, if you have a faster way and want to share it with me, that's great. But if not, I can't help you. Sorry. So from there we have our spike, right? And so now we know spike rules, or we're thinking about spike rules. And whenever I'm looking for something to find these kind of things, I just go over to Jim Dalton's website and click on resources, click on glossary, click on the S for spike, and here's our spike rules right here on Jim's website. But basically, right, if we explain this, we have an upward spike. So a price opening below an upward spike would be considered negative since the price probe or spike was rejected, leaving a selling tail, right? And so this is when we get into the definition of excess and understanding what the auction is actually all about. Okay. And so basically what that first rule of the spike rules is saying is that if price opens down here, it's saying that price wasn't accepted. And this is excess. This is a lot of single prints, a very long excess. But we see this sometimes on profiles and rejections, right? Big rejections. Does it look like that? And do I think that none of these single prints get traded tomorrow? I mean, it's really going to depend on what Globex, but if I had to bet, especially how Globex is opening up now, I'd say probably we trade some of them, at least. Next, opening within the spike shows price acceptance and keeps the rally intact. Price has found a level where a two-sided trade is taking place, the price discovery dream of all businesses, right? And so if we open up within the spike, that's saying acceptance and price discovery. And what do we know about our circle, or whatever shape this is that I just drew? We're going from balance and value, right? They're kind of hand in hand. The excess, the imbalance, and then back to balance and value. And the reason I drew it like this is because this is how much time we spend on excess and imbalance. Not very much, right? Most of the time the market is in balance or in value, right? There's not a lot of time spent in excess and imbalance. So if you're solely only focused on understanding these two concepts because they do offer the greatest amount of reward, you might drive yourself mad, because that just means that you're not going to be able to trade ever inside of here, right? And I had a zone today where I didn't trade. I didn't trade inside 29, 50, and 39. I did great today. 89 or 81 and a quarter points, or 89 and a quarter points. I can't. And I didn't trade. I took like 40 points off my or 20 points off my chart pretty much. Just didn't make any trades in there. But that's that's part of the trade plan. So the next rule for the spike: opening and trading above the upward spike reveals that price has not auctioned high enough to cut off the buying, allowing for a two-sided trade. The auction is not over, and then boom, we continue up. The bottom of the spike is support, and you begin to think of terms. As you begin to think in terms of spikes, you will see how visible the reference is. Well, we've been playing these spike rules for what, almost like every day last week, right? Let's go back and look at these profiles. And you know, a spike has to end at the end of the day. And so we saw a spike here, 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 right? I mean, this is going all the way back to the 15th of March. We've ended almost every single day with a spike. And that's letting us know that price is trying to, it's still auctioning higher, right? And, you know, that's another thing that Jim so elegantly puts is a lot of people think that when price moves up, it's because more buyers are coming in, right? There is some of that, but the reason that price is auctioned up is actually to shut off the buying. Because as price moves up, less people buy, right? And let's talk about the auction for a second. I mean, I'm gonna have a whole class on this too, but the auction, when we're thinking about something, I'll use Leatherface Crypto in here. He doesn't mind if I use him as an example. So him and I are okay. What's up, bro? So him and I are in the market, and we walk past. We're in the market for a big screen TV. That's what this is. And I'm cheap. I'm like, I'm not fucking paying anything unless it's on sale, right? But we've got to be smart about this, right? You've got to think about this like the auction. And then here's Alex, right? And he's balling. You've seen his crypto trades, right? He's just fucking killing the game lately. Like, I don't give a shit. I'll buy it. This TV's $1,000. Okay. So he buys it. Boom. It's gone. The next week I come to Costco. He doesn't come because he doesn't need to come anymore. He already bought this TV. Same TV, right? But the guy saw how quick he sold it for 1,000, so now he's got it on for 1,200. And I'm thinking to myself, fuck no, I'm not buying it, right? But there's this other guy over here, and he's looking at it, he's thinking, he's like, 1,200 is too much. Another week goes by, this thing's at 1,100. Me and this guy walk by it, we still don't buy it. Next week, back down to 1,000, right? And so what did I realize? I'm thinking to myself, okay, price went up to 1,200, came back down, and now it's back down to where it started. Nobody's buying it up here. So what are the odds of this thing coming back down? They're good, right? They're good odds. And so what do? I just wait a couple of weeks, and then I go back to Costco one day and I see this big screen TV for 850. And I'm like, score. I'll take that one. And then I go back the next week, and guess what? They're selling them again for $1,000. And why does this happen? You have to think about it, about the actual auction behind it, supply and demand. And that's how every auction or every market is traded. It's traded with supply and demand. And so if you, I don't have time to really go through all of it, and I could give examples about it all day, and that's just a very rudimentary intro to it. But if you don't understand it, put all of your focus there and start understanding that, and then come back to the chart and start to look at the chart and think about those auctions inside your head as the market unfolds. Thank you, Alex, for being my demonstrator. All right. And so now that we have our spike, we see that the auction market has been auctioning higher, or the market has been auctioning higher. And so immediately we're looking at spots that, for me, immediately what I'm thinking is, okay, well, one, below the spike, if we open up below the spike, there's opportunity to get short. And that first opportunity, let's say if we open up at 45.54, call it natural top and bottom, FOMO top and bottom. The first target's going to be these single prints, right? I'm not a huge fan of getting short right here. Especially in recent days, we've seen retests of those a little bit below the spike, and then this thing just kind of ripped. And I'm still kind of I'm being cautious on the downside, especially after a big rip up day like today, right? This day, the reason I bought puts at the close is because we finally didn't end the day with a spike, and I mean obviously those puts were wrong. I mean we did have a little bit of downside, nowhere near where I wanted to go. I did cover them, but for a loss. Um, and that happens, right? But I just wanted a little bit of piece of the game in case we had a gap down over the weekend, or in case fucking Red Dawn started happening. I wanted to make some money off of it. Called opportunity. So now we're digging in deep into the profile and kind of how the auction went today. And so I want to add back my volume at this point. So go back over to my settings and unhide. I'll just unhide this volume for now. I don't need to see the intrabar volume. And we can kind of see where, you know, we've got a decent amount of volume. If you haven't seen these volume settings, it's just 3 colors, red, white, and blue. Blue being the lowest, white being medium, red being the most, kind of like the opposite of fire, right? Blue fire is the hottest, and white and red, it's like the opposite of fire. And so when I'm looking at the profiles, I'm looking, what's the market doing this week so far? Well, today's Monday, so first day, the week's going up. What appeared to happen today with the auction? So today, and we kind of talked about this, and it was actually one of our members, TJ, that called it out. He was actually looking to get long in this F period, and it was a great call. We saw the market auction down and didn't really get any volume. And where did it get volume? At a very mechanical reference, previous day's high, right? The top of our, this is supposed to say 3-day balance, but it says balance. And so, you know, it's a very mechanical reference, right? Very easy to see. So we know that if they can't get any volume below this level, then their chances of succeeding become very slim, right? And you can kind of see, like I was saying, this is where the volume point of control was from Friday, was down here. So we pulled back into it. And I think I even wrote this on my trade plan. I said a retest of, yeah, this was it. I said a retest of the 45.16 or 45.8 would make sense and act as the first support on Monday. Well, close enough, right? Pretty close. I said 08. But like, you know, that's what comes in. I should have been able to capture this. I didn't end up getting long until we cleared the previous day high because I was short before. So that's probably why. And I had a negative bias, but I was smart enough at least to get out of my position and not let it come all the way back against me, right? I was able to close pretty low actually. At the 13 is where I closed my trade. And then from here, where's value, right? That's the next thing. I mean, it might be in a different order every single day, but just something that you should be considering, right? So where's value? So we see yesterday's value here, and we are overlapping to higher value. So value is moving higher. Where's value? This is our balance. Value's moving up. Value's moving up. So should we try to fight something like this? Absolutely not. Right? It's like, you know, probably all the people over the weekend that were shorting Bitcoin, and then on, you know, fucking Sunday night, the market opens up and says, bad. Don't short a market that's going up, and just slap them right up, right? Um, it was, you know, it was pretty set up. But it's easy, something you can control, right? Um, you just have to beat it into yourself. Don't short a market that's going up, right? If you're looking at the monthly, the weekly, and the daily, and everything kind of says this market's going up, what business do you have getting short, right? Um, I understand there's opportunity to be made on both sides, and you probably could have made money going short also, but over the long term, you know, if you're paying attention to these long term auctions and trading with them instead of against them, you're be more consistent. That's what I'm all about, is being. So next, how does the structure look? Does anything stand out to us, right? Is anything, were there a lot of mechanical references today, which we didn't really see any, which was kind of interesting because a lot of these other days we've seen a lot of mechanical references. So that's something that kind of resonates with me. I'm thinking to myself, okay, well, how come we've got all these mechanical references previously, but today someone decided to just run the market up? Or was it just simply the fact that nobody was selling? And that's kind of what it looked like. It looked like I mean, it literally was balance rules, rejection of previous balance, and then boom, the market moved up. So it was pretty textbook, and these days have been pretty textbook if I'm being honest lately. We already talked about the spike, and then so the next reference that we want to look for, and it's going to be kind of tough because this contract doesn't go back. Well, I guess so the next reference that we want to be looking for, and this thing marks, so if we're seeing red here, that's going to be a VPOC, right? A virgin point of control. If you're seeing the white dotted lines, that's previous value area, high and low. And the pink is single prints. I changed them all because I had two on white, and it was, and the white dotted line, oh no, I do still have two on one. The white dotted line is a poor high or poor low as well. You're confused. Yeah, you're welcome. But for me, it's just how I am. So everyone's going to adjust their chart the way that they want. So the first levels that I'm really looking for are these virgin point of controls. We're not really paying attention to this day at all, but pretty much up here. There's 4680 and 4626. These are levels that I'm going to be wanting to pay attention to. And so there's no time like the present. Just mark these levels, right? They can be close or far. That level. Perfect. Then copy them. Right, and I'm not going to mark all these other levels, and a lot of these levels I'm not really paying attention to. These are just extended until we go through them, right? So I'll see them on the way up, but the levels that I actually want to pay attention to, this 4626 quarter and this 4680 quarter. These look like levels, right? We can kind of see a little bit of balance. We could zoom in, but it's really not that important because this contract is not that old. We just started trading this contract, what, 2 weeks ago? So there's not going to be a lot of real opportunity volume back here. So there's just no point to really zoom back there. Key concepts, I guess, to remember. I jotted a bunch of stuff down to try to kind of bring this home. Key concepts to remember: excess and balance, right? So today's auction to the downside, we had good excess. And so that alone right there lets you know, like, okay, there's some good excess, and we weren't able to break that previous day's low, but we had good excess. So the auction was complete, right? And on a spike can be excess, but we'll find out tomorrow, depending upon where the open is at, right? We talked about value. Who is in control? Right, so who's in control of the day? Um, there's many ways to kind of find this out, and I mean, everyone kind of does it differently. You can see right here, I have TPOs above the point of control and below, right? It's 50% below, 49% above, pretty close. Volume above is 52, volume below is 37. So you can see it, not a lot of selling below the point of control. We'd say the buyers are in control, right? The market moved up today anyways, so we know that. But on a day that would be balanced or so, that would be something that you would want to take into consideration. And then I get in, and then I actually kind of step back, and this is just my personal way that I do my trade plan. But I step back and think about my reflection of the day, right? How did I trade today? Did I stay patient? Did I let my emotions control my trading? Did I go looking for a trade, right? A lot of times that's what people do. They get on the computer and they're just looking for that trade. They want to click as soon as they can. They go looking for it and they find it just wasn't the one that they were looking for. Did you focus on value? Did you pay attention to what the market was actually doing? We had value overlapping to higher, which lets us know that the safe side was to be buying breaks, um, you know, at that point. And that's pretty much what we were doing all day. Um, how was today's structure? We kind of talked about that. We had good structure today. Did the message um point us out anything, right? That's what that spike kind of tells us, that we're probing higher into higher prices. And then was I able to think in odds and probabilities is something, and that'll come from reading this book called the book called, I'll just pull it up. It's a book by Annie Duke. Thinking in Bets book. Great book. Definitely should read. Awesome. Um, but I like to consider stuff like that, right? If you are playing these things, you know, in odds, which is what you should be doing, are you taking good trades based off those odds? And remember, just because you won a trade doesn't mean it was a good trade. Just because a trade made money doesn't mean it was a good trade, right? And just because a trade lost money doesn't necessarily mean it was a bad trade. It's just, were you acting the right way, right? And it takes a long time for a lot of people to let that resonate and sink in, because they have this um, misconception that the only good trade is a trade that makes money, because they don't understand value, right? They don't understand value. I mean, it really brings it back. That's why value is being the most important thing. They really just don't understand the opportunity to learn from something that doesn't benefit them. And that's just something that, in life you should probably be keying into. And it'll help you in your trading. I promise it. Um and I mean that is pretty much it. And then I get back onto the chart and I decide, okay, so what trades am I going to be looking for next, right? Well, we have a spike. So we know if price opens up here, if the market opens up here and we test back down into the spike, this area being, I mean, a huge area, 69 to 56, should act as support. So what I'll do is I'll be lurking in here like a shark, just kind of waiting for my turn. I'm a hammerhead shark, by the way. You guys know. Sharks are savages. Big ass fin. Just lurking down here to find us an opportunity to buy in. And what do I want to see? I want to see price come back into here. If it opens up here, if it opens up here, and I want to see some initiated buying or some responsive buying if we come to the low of this spike base. And I want to see selling just kind of give up, right? I wouldn't mind seeing overnight inventory or the overnight profile look like this. This being the high, and the overnight profile just opens like this, and it opens right here. That would kind of be ideal for me. If we see that correction, that could be a nice correction up to the top of that spike. When taking a trade inside this big excess, remember that the top of this excess is still going to act as resistance. So if we do open here and you get long, let's say 60, we get up to that 69, the top of that spike, where the settle 68, you should be looking to cover some there. And I mean, unless you're seeing everything you need to see to let it run, but cover some there. And if it retraces, or even if it pops above and holds, you can always add more to a winning trade. Second buying opportunity, I think, is going to be down here in these single prints. Good reaction. Also value area high. They didn't really get a lot of chance to backfill this because of that short covering. So it would make sense if the market does, open below, might get a little bit of resistance. You might get an opportunity to fade this thing back down in the single prints. If buyers show up, might be able to take a chance, 2 for 1 special, as I call it. get short, and then you basically cover, and then you just buy it right back and take it long. Not the reverse button, but similar. If we do get accepted, if we get below these single prints and start to really just kind of fill in all this volume, if we start to get some of this, good odds to head back to this previous day's point of control and then that previous day's low. A second test of this balance, um, someone on Bybit just threw a 40 million on a Bitcoin short. I mean, might be a decent idea. I haven't looked at the market yet. Um, I think a retest of this level is going to cause a lot more liquidation, and really, really tomorrow, I don't want to be getting. I really hated this area today, like 29 to 39. It was just absolute shit inside here, just back and forth and choppy and disgusting. Where these moves were actually like clean. This move was kind of choppy. This that's G period was kind of ugly, but for the most part, the rest of these moves were clean, and this move down was pretty clean. Um, I might not mess around inside this box again tomorrow, but if we get on the bottom side of that, I don't see and if we get some supply, right? We didn't have anything down there yesterday and touch this 3 week or 3 day balance. I think there's a good opportunity to keep liquidating through that. Too risky to short down the bottom of the spike. No, no, no. It's not. I mean, the the risk is just depending upon yourself at that point. So if you're talking about like right here, Globex. I don't really trade Globex to be honest with you. Just not worth it. Even if it does move a lot, it tends to not um it tends to just be so sporadic that there's really no opportunity. You could scalp in Globex. I think that's a pretty easy thing to do if you are able to identify the moves to just scalp. I would do. But yeah, and so then I know we're taking a long time, and I promise that as you start to get this down, it starts to go faster. But at first, honestly, it does. When you're setting up your trade plan every single day, it takes an hour or two, maybe, it takes time. It just does. That's just kind of how it goes, right? Then the next thing I do is I head over to FinViz. Okay, free account. I click on my map. I look at the 1 day performance. We can see Microsoft, Amazon, Tesla are big winners. Energy sector didn't get any love today. We'll go back to Thinkorswim at the very end and check on the futures. I like to see the month's performance as well. Oh, it's because it's only going back. It's going back 1 month, not this month. And then year to date, right? So year to date, Apple's barely down 1%, right? A couple weeks ago, we are talking about a bear market, right? Bear markets do tend to bounce, but as for right now, 1% is not really that much. Microsoft's still down 7%. It's kind of a little scary area. ExxonMobil's up 35%. That long oil. But I mean, really nothing that great, right? Healthcare is doing good, but we know why. And then old fucking Warren Buffett kicking everyone's ass, right? Up 20%. Berkshire Hathaway is. Everyone said he was done for selling those airline stocks, right? Who's talking now? And then I like to go to this groups thing, and the groups thing really just lets you see the performance from each sector here, and we can see consumer cyclical, technology, big winners today, energy, obviously big loser. From there, I like to go to this page, market. Yes. And I like to look at the volume from the NYSE, and then here's the NASDAQ. Um, Yeah, it looks like the Nasdaq does have more volume than the ISE. I don't know about the futures would be a different story. But anyway, so I'm really just looking at this. Um, I don't really pay attention to the Nasdaq volume. So I'm really just looking at this upper box up here. And when I'm looking at this, I'm kind of seeing, okay, so advances and issues, declines, about the same. From yesterday was about the same. Look at the volume, almost identical, right? I mean, that's probably as close as you can get it. The trend, if you don't know what the trend is, you're gonna have to look that up on your own, but it went up, which is uh not good for the upside. Um, Total volume here about the same. So no real change, right? The market's just kind of it looked like a rotation, right? And on Friday, if you remember, we went up, but the winners on Friday were energy and that was pretty much it, right? But today we got some technology, some of the big boys coming in. All right, and then from here I go back to Thinkorswim. List, and I have a watch list here. Um, you guys can see it very well. Basically, I have Apple, SPY, triple Qs. I have all the XLs, and then I just have a bunch of futures, right? So let's go to the VIX first. We can see the VIX is just getting absolutely smacked. It did have a little cessation of one time framing today, gave us a little bit of a scare, and then started pushing back down to this long-term trend that is coming all the way back from November 2021. Right? So a pretty big trend that it's breaking down out of. And you can see, right, there's just nobody buying puts. Everyone's just been running up calls. We can see what happens. This thing really starts getting its head down. Eventually it pops up. And that doesn't tell us to, okay, well, it's going to pop up. Let's just fucking get short. What that's telling me is I need to remain aware, I need to remain objective. Much as the market is telling me that everything is going to go up tomorrow, I can't just close my eyes and buy. Nasdaq creeped up again today, finishing on the high. Still not over its 200-day moving average. This 200 moving average is starting to kind of make me nervous about tech, just because it's starting to flatten out. I don't really care about the the average itself as being like a support or resistance. A lot of times there is reactions off of it, right? People do pay attention to it. It's just not something that I'm trading. I'm not going to put a sell order at the 200 moving average, right? But if I all of a sudden we're trending up and then we hit this big wall of resistance and nothing is telling me that there is a resistance there, and I look, I want to see, I'm going to put the 200 moving average on my chart because that many people are looking at it. But it scares me when these things start to turn flat, because if we don't continue this upside, good odds this thing starts to roll over. And when you look back at something like this, we could look back, we could use the cues. When this thing does start, well, I mean, you could see it started to flatten out here. This thing rallied off the bottom, popped above it. It stayed flat. You got a pretty decent sized drawdown there. From there, you can see we've tested it and haven't really hung out above it. This is the COVID low, so not really counting. But most recently, and this is back in 2019 here, when this thing started to flatten out, it started to get kind of ugly. Right? While price was below it, right now price is still below it. So there's something to pay attention to. The SPY, obviously, way above. We drew this trend line this morning, broke through it. So SPY is just looking strong. XLK, our technology sector, back above its 200 SMA. So it's looking strong. It's still pretty far below balance. So this is letting you know this rebound in the market, even though a lot of these stocks are back at the percentages that they were at, not necessarily getting love as a sector. So it's like telling you that even even farther down, I mean, volume is starting to increase on this way up, but even farther down um, from where it was at before. Why had a nice gap up today? Financial or healthcare XLV. Still have fun. The XLF banks are pretty holding pretty strong, but they're still not kind of popping up, and they're starting to get into this little downward channel. And then from there, I'd like to take a peek at oil. Right, oil going down is good for the market. Oil going up is not good for the market. See, we traded down on a gap today, closed the gap. Looks like low here. Low is 0877. Oh no, it didn't close. So there is still a gap above, gap below as well still. But it didn't close the gap below either. So, and this was just off the news of out of China that they're not going to be needing as much oil or not going to be taking as much oil. Um, and that's, I mean, that's pretty much it. That's how I kind of set up my trade plan every single day, and then I type it up. One thing that Jim Dalton taught me was that if you can't type up your trade plan in a paragraph format, then you don't have a trade plan. So that's one thing that I recommend, right? Open up Word or open up your notebook and write it in a paragraph. Write it in paragraph format. That's why I like doing the slides, because it's just easy. I just type it all out. Um, and then it kind of, helps everybody out. What are my thoughts on Bitcoin? Look at Bitcoin. GME baby up to 190 today. One looks. I mean, um, we've just been setting this up for weeks now. We've been talking about 48,000 for weeks, and weeks. And we finally hit it today. So it would make sense, and something that I'm looking for is it would make sense to come down here. We're actually seeing a lot of catching volume here, but it would make sense to come back down and kind of fill in this weaker part of structure, get some more people on board, trap some more people short, and then target that 50K. It could easily just be the same idea. And the thing about stairs, right? And we can see stairs stepping up. This is why they say this causes the escalator down, because the stops are all lined up, right? These stops are all lined up. So if the market were to break this level, I really want to see the market hold this 45,000. But if the market were to break that level, you've got all these stops kind of lined up. And if you have weak money in here, which we know that we do, they could easily scare, liquidate, and drive it back down to these 42s. The logo? What logo? Oh, the watermark on the bottom right? Oh, then there's part of this. I have no idea. I could just take it off. I'll figure out. Yeah, my bad. I can get rid of it. But yeah, guys, that is pretty much it. My thoughts on Bitcoin are pretty much that. I think that we will get a little pull down. If not, then there's really not much resistance up here, right? Above that 48, I mean, above this high right here, we have a poor high today. Above that 48,000, quick ride to 52, 144 with a pit stop at 50K. What makes sense. And it's I don't even see that on my screen, John. So thanks for pointing it out. Yeah. Off. Yeah, that's pretty much it. It is 5:30, so we took about an hour, right? When we did this. Oh, there it is. An hour and 20 minutes. Yeah. Oh, you don't see the logo on YouTube either? Oh, there's not like a logo like down here in the bottom right. Maybe if you're on YouTube on the phone, it might. I don't know. I'll take it off. It's not that big of a deal. I don't really care. Yeah. So it took about an hour and 20 minutes to kind of run through all of this, and it'll it'll take you about an hour, if not longer, every single day, right? And this is when you're consistently trading something every single day, right? If you don't trade you know, Bitcoin every single day, then you're not going to be doing this trade plan every single day unless you planned on trading it every single day. But I trade the ES every day, so that's what I'm, doing my trade plan off of. But I do a a quick rundown on things that I plan on trading, right? So this Bitcoin trade that's possibly setting up. Not that I'm a huge fan of getting long up here, just because of how extended we are, but you know, if I was looking to get long here, I'm gonna switch back to the monthly, the weekly, and the daily chart real quick, just to give me a general perspective on the market sentiment, right? And the same thing with everything you trade. Let's say I'm in a GME trade right now. I have 250 calls, calls. I've calls up here, and I've been itching myself every single day to cover them, right? Because they're up, but I also kind of want to hold out because we've seen, if we go back to the monthly chart on GameStop, we're breaking out of a 2 month kind of balance, or like a 3 month balance, really, right? So we're on breakout mode, and it seems like above that 200, the target is 250, which is why I bought the call. I'm looking at them longer term. But you know what I mean? Like, just hit a monthly real quick. It doesn't take long. It just seems tedious. Here's a daily chart. Daily's one time framing up, right? And you've got people that are just that shorted GameStop all day today because they are fucking dumb. 256 is the 44 retrace. Let's go. I need to patent that, I'm telling you. But like, you know what I mean? Like, when you get onto a chart, right? You heard GameStop news all weekend. You get onto the chart, you're like, I'm buying GameStop puts today. This shit's going down. It's up way too much. You look at the chart, we're one time framing up. What's this? 1, 2, 3, 4, 5, 6, 7 days in a row. And you want to get short? Why? What's telling you that? Nothing. Nothing is telling you that except for your stupid fucking brain. That's it. Right? So retrain that thing to pay attention to what's actually going on. Because what happens is you get trapped into these things. Um, you watch a YouTube video, and you don't even know it, but little subliminal things can really put you in a perspective. And if you're not able to step back and maintain perspective, then it's going to happen, right? You're going to get trapped in some of these things. This is what we've got to avoid. We've got to avoid getting into these mind traps, right? Someone's probably drawing us a nice little trend line. See, broke right out of it, and people still short it all day. Like, but it's because they try to see things that aren't there. So they probably got this, and they're like, oh well, we go here, still a trend line. Like, I mean, how many lines are you going to draw on your chart till one of them works, right? And that's not going to help you trade, because what are you going to do? Short that spot? Or that's just your way to justify making dumb decisions, right? At least it is for me. And if I'm hurting anybody's feelings, I'm more talking about myself because I've been through these issues, right? And that's why I'm here trying to help you guys not have to go through them. But I mean, simple as that. You switch to the daily, and let's say, oh, okay, you ran a scanner. There's a stock screener on here, and you looked at the things that were up the most. GameStop was up. You're like, oh, GameStop's shit. Immediately, the GameStop in my town has nothing, and you're thinking, oh, I'm shorting them. You get on, you look at the monthly. Monthly looks okay. You look at the weekly. The weekly looks and then you look at the daily, and you're like, well, damn, thing's getting some gas. But immediately because of how the internet or how YouTube kind of algorithms in these things, or how your brain is trained, right? Kind of like we talked about on these TVs. This thing's way up, right? Think about this TV. Me and Alex back at Costco looking at TVs. $1,000 for this TV. I say, nah. Alex buys it. Guess what? This one's 1,200. And guess what happens to people? I mean, this is just happens to everyone. This guy goes, "Fuck! This thing was $1,000 last week. It's $1,200. It's gonna keep going up. I'm gonna buy it." And then what happens the next week? 1,400. So why not just stay patient and at least let this daily low get broken to let you know that there's some supply in the market? Why? What's the obsession with being right so much that you need to short a high? You know? And I'm over here preaching a little bit now, but it's just still, it's like you've got to think about these things. Why, why short the high? Is it because you're afraid to miss out on opportunity? Probably. But these are things that you have to, you have to dig in deep and find out. Read some books. Join this Discord and make some friends. Yeah, other than that, dinner time for me. I'm gonna head out. We went on for about an hour and a half, so really good. Probably gonna take some watching back. I'll put together a little slideshow specifically for this, and push it out, right? Because this is one of the classes that's in the boot camp. So this, I mean, it's just nice with some questions. So we will push that out, and yeah, you guys have a wonderful night. Make sure that you are managing risk and sticking to your trade plan, and thanks for hanging out.